Welcome, everybody. Good afternoon. Welcome to another edition of Beyond Connections, our bi-monthly live session where you are given the chance to ask us analysts your burning questions about the stock market. I'm Bess, one of the analysts for Advocate Securities Corporation, and I'm joined today by our technical analyst, Isaiah. So later you can ask your technical analysis questions and if you have any requests on charts. And I'm also joined by.
Hi, good afternoon. I'm Herman, and I'm senior analyst.
And I'm Rainier, one of the research analysts.
So feel free to chat in your questions and we'll try to address them as much as possible during this live session. So while we wait for those to come in, today is actually a good day to have this session because the PSCI is up today and volume was good today compared to the past few weeks. What can you say about that, Fernando?
Hi, just to give the specific numbers, so the PSCI ended at 6,578. That's up 111 points, and that's equivalent to 1.73%. So, yeah, sakto nga yung ano natin yung live natin today because the market ended in the green. And market value turnover is also like relatively higher than the previous days at 5 billion. And the top gainer appears to be Monde. And siguro the obvious driver for today's gain by the market is the slower than expected US inflation data.
Yes, which was announced last night, Philippine time. I think it came in at 0.2% for the month-on-month CPI inflation, which is lower than the 20% that was the consensus estimate. So that's fueling the hope that the Fed would start to pause soon, although the odds still are that then at the next Fed meeting, which will be at the end of this month, there might still be a rate hike. So the effect naman on our domestic market, if the Fed does still hike on July 27, that would mean that the interest rate differential with the Philippines would be
Narrow.
yes, would narrow. And because the next BSC meeting is still in August pa. So that also increases the odds that the BSP cannot cut rates anytime soon. So that's actually good for the banks because that will keep interest rates high. That will mean that they can maintain their yields, which leads to higher interest income for them. I guess that's probably why video is also one of the top gainers today, and most of the financials are in the green also today. So aside from video, Monde and JFC are one of the top gainers today. So what can you say about that, Raymond?
Yeah, for Monday and JFC, and mostly because, mainly because of inflation and it's tilting downwards. So it's a positive for JFC and Monday. Although we preferred Monday, currently it currently adds that the upcoming tax law or that the salt tax being discussed is it looks like Monday will be safe or they won't be affected by the new imposition of tax measures. So mostly it will be on URC most likely. So that's why we've seen URC fall down compared to Monday. And apart from that, I think what we also noticed in today's rally and also yesterday that the juggernauts, basically those with higher market caps, they're the ones who have rallied so far with foreign interest coming back or slowly coming back at least in the past 2 days. So for example, BDO, even SM, and we have written this in our short takes that when the market suddenly rallies or even foreign interest coming back the ones that will rise up first will be in the bigger market caps or the larger ones.
Yes, and there are a couple of questions already in the comments. But feel free to add more. Everyone that's watching, the first H dot commented wala nang rate hike. That's the hope for the Fed at least. Um, because the inflation rate is slowing for the US. Although one of the Fed officials is still commenting that they don't want to stop hiking too soon. We will have to see, at the end of this month what they will do. David Ong also asks, will Maharlika affect the market? Maharlika Fund affect the market? So that's one of the um, big news items over the past few weeks now. Maharlika Fund, hopefully this will be invested in more infrastructure projects that would actually be able to affect maybe some construction stocks. They're listed in the market, but can you add anything, Ron?
Yeah, siguro the winners would depend on the allocation of the fund. Yes, I think I also read about that, there would be allocations on infrastructure. So that sector would certainly be one of the winners if this is successfully passed. So there.
And also H dot has another question. What's your take on P Gold and its growth? Its capex has more than doubled. And what would this mean for P Gold?
Okay, for Pure Gold, and I think this is every like na mayroong Pure Gold question. So so Pure Gold, we still like Pure Gold. Although we didn't include P Gold in our top picks. We still find value in P Gold and particularly on its growth, despite it seeming to be or it looks like it's a mature company. We still think that it has room to grow, particularly to uh, one of its uh, one of its brands in SNR, because SNR has been on. I guess they're expanding more, and that's why it's a follow up to the next question that its capex has more than doubled. This is actually because of its penetration in the Cebu market. So they're opening more markets in more stores in Cebu for both the Pure Gold and the SNR warehouses. So this is actually good for Pure Gold, and basically we're still positive. But the reason why the another reason why we also didn't include P Gold in one of the topics because P Gold is technically one of the more defensive plays. Basically, it's resilient. It's essentials. It's always going to be there, but we believe this is not the time to be defensive. So that's why we have included or we have chosen other picks so far for at least for second half of 2023. Hope that helps.
Okay, from Team Reina 1, what are your insights on Converge?
Okay, so for Converge, we nung Q1 niya we saw a significant slowdown in earnings growth, and this is as we have written many times, we said this is due to much of the demand being pulled forward because of the pandemic, and market players are already seeing some saturation in terms of postpaid broadband. So now they're trying to venture into prepaid home broadband. So we expect this to result to lower average revenue per user because of the income classes that are being targeted in this new product. So lower our pools, and also it might result to higher churn rates also. However, we think Converge is already close to its bottom, and among those that have among Converge and Tel, I think we would prefer Converge because it has shown a higher revenue growth in terms of home broadband compared to Tel. So I think our target price is close to 13 for Converge. So decent upside, potential upside at current prices.
Okay, next question from Nanik.
Oh wait, I think IC would want to show the charts for Converge.
Okay.
Everything is happening per month. Price is at its lows. Um, you can see the price has stabilized in the RSI. You have a bullish divergence in the RSI here. So you might be able to rally towards the upper band of maybe 12 in the short term.
Okay, next question from Nanik Baunani. Sorry if I mispronounced your name. Good afternoon. Who is the president BBM Sonon next week? Will it have an impact on the market as well? So that's one of the things that we will be listening to next week. Hopefully, there could be some mention on what the government will prioritize in terms of projects or industries that they will maybe lend some support towards. So depends on what will be the content, but that's what we're going to look for in the speech, what the government will focus on. Um, uh, this year especially, so we will have to see, depending on what will be the content. But that could be a driver if there's something interesting in the speech next week. Next question from Edwin Olivario. How will the CPI affect the stock market? So last week, inflation rate for the Philippines for June was announced. It was lower at 5.4%, which was lower than the market expected slightly, because the expectations were at 5.5%. So we expect inflation to further decline going forward, especially towards the end of this year, mostly because of base effects from over the past 12 months. Um, uh, the more direct effect I can think of right now is that as the inflation rate goes reaches the target range of the BSP, they will have more pressure to start cutting rates when the inflation rate reaches their target range. So that could be if they do that, if they cut rates, that could be a catalyst for the stock market in general. But we don't expect that for this year. Maybe perhaps maybe early next year, maybe next year at the earliest. So there. Next, the question, or do you have additional, especially for the consumer stocks, inflation effect?
Well, yeah. I guess over the past year, most of the consumer stocks have been beaten down because of inflation issues. And what we're seeing so far is again similar to what we've been seeing or what we saw with Monday, given the lower CPI or lower inflation, both for the US and the Philippines. It is looking better so far compared to what we've been seeing over the past few months. So we're hopeful naman for for the rest of the year.
Maybe to give chance to other commenters from Jonas Cyril Quizon. What are your top picks for dividend stocks? Um, yeah, Herman, do you want to?
Sige. Thank you for the question. So for top picks for dividend stocks, top of mind would be CAD. So that's our top pick for among REITs actually. And if you look at its share price performance on a year-to-date basis, it has outperformed its peers. And also, we like its business model because it's relatively stable. Um, it is also insulated from the persistent work from home setup that is affecting the occupancy rates of other office REITs. So they're insulated from that. And also we expect dividends this year to rise year on year and quarter on quarter as the company finalizes its acquisition So there are our estimated yield for that for C-rate at current prices is around 8%. So that's still relatively better than most of its peers. Also, we still like Semerara, so as a dividend play because even though coal prices have declined by 65% on a year-to-date basis, you can see that the stock has been relatively more stable with a decline of less than 20% only. So that's because of the resurgence of its power segment. So the power grid is still relatively tight. That's why the supply in the power grid is still relatively tight. That's why it's resulting to elevated Western prices. And its Semerara's power plants are performing relatively better compared to its previous years. So it results to higher generation and couple that with higher spot prices, it results to higher profitability. So we think Semerara can maintain its double-digit yield at current prices. So I think those are two of my top picks among dividend stocks. If you have it.
Oh, okay. Well, I guess just to put some insights. Well, not really top pick, but LTG used to be our one of our top picks for dividend stocks. And personally speaking, when we look at LTG, uh, we we think that the dividend payouts might be peaking already because earnings have been slowly um, declining, especially when it comes to their tobacco business, which is one of their top contributors for their bottom line. So once if it continues to fall, especially with the sin tax increasing and volumes for tobacco sticks are slowly coming down, so this might affect dividend payout. So we for dividend stocks, we might recommend to look at what Herman said earlier with CV and SEC compared to LTG.
Well, LTG's tobacco business is still a cash cow for them.
Yeah, it's still a cash cow.
That's enabling.
That's
Yeah.
enabling them to
Dividend.
provide dividend payouts. But since it might be peaking already, we might see falling dividend payouts in the coming years.
I see. Still any technical guidance. Yeah, SEC or SEC.
Siri or SEC.
Serious crisis.
Excellent choice.
And also, I guess for SEC, what we've been seeing over the past weeks, they've had several disclosures on their directors, basically their owners, have been buying back shares. So it might be, I don't know, an indication for their next dividend payout, which will be on
November. Special dividend.
so
Can I show the chart?
yeah, for those who want to enter or initiate a position.
So this is the chart of Siri. You can see it's dividend adjusted. So without dividends, it's far from the highs, but with dividends, if you adjust it for dividends, it's actually already near the highs here. So with the dividends, it's clearly being bought. There's clear demand for the shares here at 251. It's continuing to rise higher.
Siguro just to add, I think the outlook for interest rates is that it has already peaked, as the best mentioned earlier. I think this also boosts the attractiveness of dividend paying stocks now. So because on a relative basis, their yield offer is now becoming more attractive as the interest rate environment becomes more loose. Kumbaga, so there. We think our REITs are likely to also outperform.
Also for the property REITs, do you have any, I guess, parang second to C-REIT. What would be your call for it?
Okay. That's a tough one. Okay, but good question. Siguro what's easier to answer is we for now we're not recommending fill it or those na may higher exposure to CBDs which have higher vacancy rates. So fill rate has much of its income is coming from Alabang, which has one of the highest vacancy rates among major cities in Metro Manila. So we're still not keen on that. Siguro among major property REITs, we now prefer MREIT because it still offers relatively higher yields compared to RCR and A-REIT and FIL REIT. So we still like that, and the asset infusion from its parent is still continuous. So there it still offers continuous escalation in terms of dividends. So among property REITs, I think I would prefer MREIT. Okay.
From, I see there are some questions about the platform, no, but this is, we're noting that down, so some of you are asking about the conditional orders out of Atlas. We're noting that down, but this session is for, we want to focus on research related questions so that, um, we can make, we can just, yeah, note that down. So next question from Joseph Poblete. Ano po ang insights niyo sa Globe?
Yeah, the stock has been very very strong the past few days. We wrote about it recently, actually, about in our short takes. So I think the primary drivers is the planned IPO of Mint, which is management's plan is to be push button ready by year end. So we expect significant developments in the next 12 months. So I think that IPO is highly anticipated because of how Mint has grown in the past years. And then also in terms of SIM registration, I think Globe has secured its highest equivalent of mobile revenues. So according to management, they have already secured 96% of its mobile revenues. So they're the closest to making sure that their mobile revenues remain stable in the coming quarters. So I think those are the two drivers for the stock's increase. Now, our target price is still above 2,300, but it would still highly depend on the valuation of Mint and how much stake will be retained by Globe by the time Mint lists in the market. Can we share some?
Also, so I think the last time we discussed Globe on Beyond Connections, we talked about this falling wedge, which is a bullish falling wedge. It just broke out now here at 1837. So hopefully we can sustain that move. Resistance would be closer to 2,350. So hopefully we can go.
And maybe we're down to our last two questions from Jay. ASEN preferred offering.
Okay, so for ASEN, they're offering two classes of preferreds, Class A and Class B. So for Class A, it's mostly floating rate. And then for Class B, I think it's around 8%. So we prefer, because we expect interest rates to go down in the medium term, we prefer Class B to the Class B preferreds because we think the Class A would react negatively when it lists. It would react negatively to the falling interest rates because its interest rate or its coupon is floating. Kumbaga, it's based on how interest rates move. as compared to Class B, which is I think fixed at 8%. So for those looking for prefers, I think ASIC Class B preferred is recommendable.
And from Steph Nora, or maybe from Charles Lannon for ATI, we can do charts for ATI.
Metro. So yeah, so it's not very liquid. The average value traded is only about 670,000 per month, per day, sorry. So there's lots of gaps in the chart, but it's generally trending up. It's not something that we look at often. It's a company that also it's trending up. Um, that's all I can see so far. It could be something to bottom up here, but yeah, it looks like there's another right shoulder to hopefully bottom up. Is this on the radar?
We don't actually cover ATI, but I suppose it's fundamental performance would be directly tied to how imports fare. Uh, in the past few quarters or past few months, imports have actually been weak. So that's probably um, not good for this particular stock. Although um, I think there was a very slight improvement in May over the past quarters. Imports have been weak, partly because of supply shortages, and also uh, the manufacturing sector in the Philippines, which imports the raw materials, has also seen some weakness. So um, the volumes have not been that great. So that's for EPI. And last na, for today, since it's already 4 o'clock, from Seth Nora, any insights for property stocks?
Mm. Okay, so I think Bess mentioned earlier na we expect our rate PSP to maintain its rates, but we don't expect any rate cuts yet, at least for this year. So that means interest rates would still remain elevated in the medium term. So we think this is would still have negative implications on property on the residential segment. Also, we saw some comments from construction companies. They said that developers are deferring their capex plans because they are trying to gauge the market first. So that's an indication that demand hasn't completely recovered yet. So 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 then, yeah, as I said earlier, elevated interest rates should still be negative for residential, while the office segment is still reeling from the effects of work from home. So that's why we're still seeing elevated vacancy rates in some of the cities. However, yeah.
Sorry, just to add, even for mortgage loans, it hasn't the recovery has not been as brisk as for other types of loans. So the demand really is compared to other types of investments or big ticket items for consumers. That's not one of the things that they're looking at. Even with the recovery in incomes and the economy in general.
Okay, so yeah, that's a good point also. And then yeah, so on the other hand, malls and hotels are I think staging a strong comeback or recovery. So mall foot traffic have already exceeded pre-pandemic levels, as well as small revenues, while hotels are also registering huge quarter-on-quarter growth in the past quarter. So we expect this to continue moving forward, especially as tourist arrivals have also been robust. I think um, on the as of end of first half, it's all tourist arrivals are already 58% of the full year target by the DOT, and then Q4 is also a peak quarter for tourist arrivals. So we expect these sectors to continue to benefit from the continuous arrivals of tourists. So we continue to prefer those companies, property companies that have huge exposures to malls and hotels,
Which are
SMPHS and RLC.
Okay, so that's it for today. Thank you for Dead on the Rocks commenting on our new studio. Um,
Yes, we like it too.
so stay tuned for our next episode of Non Connections, which will be probably in the last week of July. So thank you for your questions and thank you for spending your afternoon with us.
Thank you.
Bye.
Bye.